Let's focus on Bank of Baroda, and we've got the management of the bank. We've got Rajiv Kumar Bakshi, Executive Director, joining us on the show now. To begin with, Mr. Bakshi, what are your credit and deposit growth targets for the current financial year? And also tell us how your low-cost deposit growth is going to play out.
Credit and deposits will be, at the moment, first quarter is always very, very slow and moderate. In fact, there is a fall in the credit and deposit after March build-up that happens. It will all depend upon how the economy grows, on which hopefully the government is trying to take action. If the economy starts growing, then if the economy grows even at 7% during the year, or the worst estimate of 6.89%, then also the credit growth should be around 17-18%, and I presume the deposit growth will also be around those levels.
Mr. Bakshi, if we look at your numbers more closely, the fourth quarter profits was boosted by a tax write-back. What does this tax write-back pertain to, and is there a scope of further write-backs in the coming quarters?
For one, this profit seems to have been boosted by the tax flowback. But if you see on the staff expenses, also the AS15 provisions this time were done during the last quarter, which were not done in the previous quarter. So both more or less offset each other. Plus the treasury gains that we had in the earlier periods, so they were not available to the same extent in this quarter. So there are exceptional factors in different quarters. More or less, I don't think that overall, in the overall balancing picture, it has made a tremendous difference. The NIMs have been good. The net interest incomes have been good. Our credit and deposit growths have been better than the system.
Right. And Mr. Bakshi, what's your outlook on the international business of the bank with regards to growth, margins, asset quality?
Our asset quality in the international has been quite good, with around 0.5% of gross NPAs and net NPAs being much less than that. We feel that our overseas credit will continue to be good. Actually, 50% or 55% of our overseas credit is very secure. It is buyer's credit or against letters of credit of other banks. So that much portion is totally cushioned off. The balance portfolio is very well diversified among various corporates, mainly Indian, who have raised their ECBs. As you know, by the very regime for ECB which RBI has laid down, the pricing on that which can be charged, although it has been relaxed a little recently, still the higher rated borrowers only can access the ECB market. And with our position of being able to lend in the ECB market with our foreign branches, we get exposure on better rated clients. So we hope that Indian segment of our lending will continue to do well. Some small portion, 20-25%, is our domestic credit, which is also good, which are mainly clients which have been with us for a long time. It, of course, partly depends on how the economies in those areas perform, but we do take care in credit selection as well as in credit monitoring that the health should continue to be good. So overall, I don't think there should be any much difference from whatever the present asset quality that we have in our overseas book.
Just to reiterate at that point, where do you see your asset quality stabilizing, given that it did come under pressure, and how do you see your gross NPAs and provision cover shaping up for FY13?
Our slippage ratio, we always maintain between 1 to 1.3%. I think it should not be more than that. In fact, it should be towards the lower end this year. Vis-a-vis the provision coverage, it is our policy to maintain around 80%, and we will continue to do that.
Right, Mr. Bakshi, the bank has a high exposure to the textile sector, and reports that the government has asked the bank to restructure textiles have been doing the rounds. If you could tell us what the impact of the same on the bank's restructured assets and asset quality will be.
Yeah, I cannot put a figure on the restructuring, but let us get the context right. The demand for restructuring comes from industry scenario and from the industrial units. And banks also want that, since restructuring is a phenomena that is a fact of the life. If there are some operational concerns which the units are facing, then the debts need to be rephased or given some more time. Now what the banks have asked and what the government has agreed, they have not started the restructuring process. It is a demand of the textile industry, and the banks therefore have asked that if at all the restructuring is to be done, and it has to be done, then a forbearance, regulatory forbearance should be provided to the banks, which means that we should not have to provide much more. You know that restructured assets need 2% provisioning, whereas other assets need 0.4% provisioning. So our provisioning requirement should not go up, and even if a textile unit has to be restructured second time, it should not be treated as NPA. These are the benefits that the banks have asked, and that is what this proposal envisages.
Finally, Mr. Bakshi, there are reports going about that banks are in talks with the finance ministry that telecom loans will be impacted if the spectrum price will be hiked. Are you concerned, and what do you think the impact will be on banks' exposure to the telecom sector?
No, I think our exposure is to very, very strong players, and I don't think if the telecom market is to continue in the country, the exposures that we have are to the strongest of players. Of course, these things may not be good, or different business models maybe have to be worked out by the telecom players, but as of now, we don't think that we have got any immediate issues with the health of our asset portfolio.